Welcome to another TFN Smart Trading Action Alert. I'm Laura Cadden. My guest today is J. Christoph Amberger, author of the acclaimed book, Hot Trading Secrets, and executive editor of Taipan. Thank you for joining us today, Christoph.
Thank you for having me.
Pleasure. Your book explained a considerable detail, a good dozen individual trading models. Could you describe what basic considerations these systems have in common?
Sure. Our editors and I really consider ourselves technical traders, which means that we are looking at markets as aggregates and reflections of human behavior. Now, if a large number of humans behaves in a certain way, they leave traces in tracks in the daily data streams, and we analyze those data streams in view of patterns that we're trying to identify. If we can identify patterns, behavior becomes predictable, and thus markets become predictable to a certain degree.
So what are you specifically looking for in these patterns that you mentioned?
We are looking particularly for what we call unique constellations of catalysts. They can be quite sophisticated and complex, like in our wave strength analytical system. They can be quite simple. For example, we are looking at volume spikes that are not accompanied by any corresponding price increases, for example.
So right now, what would you say is the easiest and most basic trading system to follow?
Well, right now we're looking at the systems we have built around our IPO trend analysis. And IPOs really are in the process of making a considerable comeback, not just in the States, but also thanks to the Sarbanes-Oxley Act in Hong Kong, in London, in Shanghai.
I remember you recently recommended an American IPO that traded, it had gains of over 40% on its first day of trading. Was that right?
Yes, actually, this is a prime example of this aggregate human behavior. This was actually a recommendation that we pulled and did not send out to our subscribers because one of the celebrity analysts had touted the stock on his television show. And premature media exposure like this has a tendency to create inorganic demand spikes that push up the stock price the first day of trading, which is very nice, and the intended purpose of the exercise for the company that is issuing the stock and for the underwriters. But typically stocks like this plummet back after a day or two, and the stock was no different. Of course, it doesn't mean you can't make money on IPOs that have shot their wad on the first day, but you can identify patterns such as the red zone or the flying V, but these usually take about 2 to 3 years to materialize.
But if you try to avoid these feeding frenzies, why do you think Chinese IPOs are such good trades? And if you look at recent Shanghai or Shenzhen A-share new emissions, every single one of them has been oversubscribed by a factor of 20 or even 40.
Well, you're right. Mainland Chinese today like playing IPOs just as well as their Hong Kong cousins have liked playing the ponies since the 70s. The main difference between that I see between the classic IPOs that we remember from the late 90s and the Chinese IPOs now is that back in the 90s and partly now, the American IPOs tended to be new companies going on the market, new concepts, sometimes business plans that were scribbled on a cocktail napkin. Now, Chinese IPOs that are going live in Shanghai and Shenzhen these days are established companies with huge capitalizations that are frequently traded in Hong Kong, in other markets. And they really are not in it for the venture capital. They are looking for, they're really looking at those IPOs like a trip to the ATM machine using someone else's ATM card, because they know that the Chinese investors will bid up whatever they put out on the market.
Well, how would you suggest traders that don't have access to the Shanghai exchange capitalize on this?
Well, we at Taipan have developed what we call our backdoor IPO strategy. A lot of the companies like Guangshen Railway or China Life have actually been trading as ADRs, as American depository receipts, for many years. So actually you can purchase that stock or the stock bundle, depending on what configuration the ADR has, way ahead of the actual IPO and kind of wait for the IPO pop to carry up the price. And in some cases, you even can play options on these ADRs.
So what's the next victim of this backdoor strategy?
Well, we're currently looking at a small Chinese, actually it's two small Chinese companies, Chinese aluminum companies, who in mid-January agreed to being bought out by their parent company. Now, both of these companies already trade in Shanghai. The company that's doing the buying out is trading in Hong Kong. They plan to absorb both of these aluminum companies and replace their stock on the Shanghai exchange with their own stock. Now, just to get you an idea of the magnitude of this is the second largest aluminum producer in the world in one of the hottest aluminum consuming markets in the world.
When do you see the IPO taking place?
Well, our reports indicate in March or in April.
So, and you're going to keep this stock name to yourself like so many of my other guests?
Absolutely not. If you're interested, or if any of our viewers are interested in this stock, we are putting a white paper about this recommendation right on taipanfinancialnews.com, and it is yours to look at and download as you please.
Oh, excellent. There you have it. Again, look for this hot new China IPO special report on taipanfinancialnews.com. Please tune in next week for another profitable opportunity on TFN's Smart Trading Action Alert. For taipanfinancialnews.com, I'm Laura Cadden.